Hi everyone and welcome back to today's morning report on Friday the 8th of May with me, Rich Perry, market analyst at Handtech Markets. Let's look at the final chart, which is gold, and this gold chart remains in this range really, much like dollar yen, and I pretty much have to say that every day now because it is quite a similar looking sort of range. You have this sequence of rally, correction, rally, correction. We've had a correction and we're starting to form a little bit of support, but at the moment, I would argue that you're still within a bit of a bearish bias within this range. You're trading underneath all the moving averages. You've got the momentum indicators slightly bearish, not very bearish in any way at all. In fact, I'd say very slightly bearish, and you'd argue that because you're trading underneath the moving averages, that gives you that slightly bearish outlook. Now, this is the hourly chart. That was the rally a couple of days ago, just rolled over, and we fell below, interestingly, below that 1185, and you started to find that acting as a bit of a pivot level. Interesting if that continues to be a pivot level, because it did rally above it, and you've started to sort of fall back away again. Let me zoom in slightly so you can see a bit better there, and maybe that 1185 will again act as a bit of a pivot level, but at the moment it is pretty much sort of fairly still sideways really, nothing too significant, but the fact is that we're sort of finding resistance now underneath $1,200, which again I would say is just gives you a more means that the gold price is now camping more in the sort of lower half of this range. Under $1,200, that again gives you more of a negative outlook on this near term. But still, to be honest, these momentum indicators are not really excessively sort of giving you much direction either way. I think it's more of a consolidation in front of the payrolls data really, and I think that payrolls data this afternoon is going to be the big driver of gold. It tends to be that. In recent months you've seen the gold price spiking sort of $40 on the payrolls data, and it tends to be significantly moving on the negative correlation to the dollar, so watch out for that. But at the moment I think this is just going to consolidate really. It's pretty much flat on the day, nothing too significant, up $1.50, but yeah, nothing too major in terms of movement yet, and I think it's probably going to be like that until the payrolls data. Now, in terms of the outlook, generally I think you'd turn more negative if you saw a close below 1178, which was that reaction low there, and certainly if you started to see, started to see the a close or an intraday move below 1170, I think that would also suggest we're going to be breaking lower. But at the moment we're sort of neutral, but with a slightly bearish bias on gold. Anyway, I wish you good luck in your trading today, and I will speak to you again on Monday. Thank you.